Schwab Advisor Services is a proud supporter of the RIA Edge Podcast and independent financial advisors like you. When it comes to your independence, Schwab Advisor Services is all in. They provide industry-leading custody services with no AUM minimums, no custody fees, and digital onboarding for starters. With Schwab, you'll be backed by some of the most passionate folks in the industry with over 35 years of experience helping firms of all sizes. To learn more about everything Schwab can do for you, visit advisorservices.schwab.com. Hello, everyone, and welcome to the RIA Edge Podcast. I'm David Armstrong, the editor-in-chief of wealthmanagement.com. This podcast, as you know, is the chance for me to speak with executives and leaders of RIA firms that are growing quickly, but yet not sacrificing client experience in the process. What we like to say is not just wafting upwards on AUM growth, but growing by design, not by default. Today, I'm thrilled to speak with Phillip Hamman, who is the CEO of Linscomb Wealth in Houston, Texas. Phillip, thanks very much for joining us.
Yeah, glad to be here. Thank you for having me.
Linscomb Wealth is a $4.2 billion RIA based in Houston, serving about 1,800 families. We know this much, Phillip, for people who aren't maybe familiar with the firm as well as they should be. $4.2 billion firm, pretty large size there in Houston. Can you give us just a quick 101 on your footprint and the clients that you serve and the value you bring to them?
Yeah, absolutely. And David, thank you for the introduction. So Linscomb Wealth has a pretty storied history. It goes back more than 50 years. It was started here in Houston by Dan Linscomb. It was started as Linscomb & Associates, and just, over the years has grown to that $4.2 billion that you talked about. But it was really in about the 1980s, the early 1980s, that the firm began to take on the form that we are today, where they made the decision to start to transition into the fiduciary fee-only wealth management world. And so that's where we find ourselves today as a firm. So again, at the end of the year at about $4.2 billion in assets, working with about 1,800 clients. Today, our clients span about 40 states. So as they've, retired and moved on, we found ourselves working in different locations. In terms of geographic footprint, Houston is still home. Our headquarters is here. We also have a satellite office in the Woodlands here in the Houston area. We have offices in Huntsville and Birmingham, Alabama. And we joined forces with a firm. We acquired a firm in Atlanta about 5 years ago. And then we also have a pretty good presence in the Texas Hill Country today. So starting to spread out across Texas, the Southeast region of the U.S. And, as a firm, our big thing is we remain fully committed to the fiduciary model of, taking great care of clients, providing, exceptional service and working with them in a very personalized and holistic manner.
Can you characterize your clients for us? I imagine there's a lot of energy executives perhaps down there in Houston.
Absolutely. It's hard not to be in Houston and work with individuals that are tied to energy in some way, shape, or form. But we have a great group of clients, and I think the clients are representative of the type of firm we are, very, team-oriented, collegial culture. But the majority of our clients typically have somewhere between about $1 to $10 million in liquid net worth. They want to seek out somebody that they can delegate to. They want somebody that can not only help them with the investments, but also help them with a wide array of financial planning topics that they would like to address. Again, as we've spread out, you get something that looks maybe a little bit different than just the energy client, again, in some of the different markets that we talked about. And then a growing segment for us, we have a growing number of folks that start to look more family office in nature. Just, the complexity of things is spread out. You've got multi-generational aspects that you have to work with and that sort of thing. But again, bread and butter has typically been about a $1 to $10 million liquid net worth client, and then a growing segment there with those family office type clients that have greater complexity.
The pivot to fiduciary-based planning in the 80s was certainly early for that movement. There's, I think, there weren't that many fiduciary firms around in the 80s. And do you think that that move, any way that you could sort of characterize the growth since then? I don't know how long most of your clients have been with you. I imagine a long time. But the movement towards the fiduciary side of the business, how has that sort of changed the dynamics of the firm or the the relationship with your clients, and the growth trajectory?
Yeah, it's a great question, and I've been here since 2013, and was definitely not in the position to be a partner in the early 1980s, and definitely more of the G2 generation. But I think the partner group at the time, as they came along, as they tell the story, they saw the opportunity and they saw the uniqueness of what it represented, and I think they decided to take that risk, and really glad that they did, and that we're all here today as a result of that chance and effort that took place. And I think that really allowed them to get on a different type of growth trajectory as they started taking on that investment management and planning business. And the firm has just had a nice steady growth trajectory over that time. I'm not going to get the number exactly right, but when I joined in 2013, I think the firm was around $2 billion in AUM, and today, again, as you noted earlier, we're a little north of $4 billion. So I think it put us on that sustainable growth track, and just a lot of our business over time has continued to come from client referral, just as folks have worked with us over time, and the firm has grown very organically.
I'm glad you make that comment about the second generation advisors taking leadership roles now, because I think we see this with a lot of advisory firms happening now. And one of the things we see as the younger generation, for lack of a better word, or second generation junior advisors take over the ownership and leadership of the firms, is the expansion of services, right? As you note, investment management, simply portfolio management, can't be the only value proposition that an RIA has. And certainly you guys, I know, have branched out into a lot of different services, right? Doing the full financial planning, estate planning, some insurance review, retirement planning, legacy planning, et cetera, et cetera. How have you built out those services over your time there? Is this a homegrown efforts? Have you partnered with outside folks? Have you brought inside? I know you made the acquisition in Atlanta, but are there skill sets that have been brought in from the outside to kind of fill out that menu of services you offer your clients?
I think in terms of how things have evolved, again, I think you had the original partner group here had either a legal background or a CPA background of some sort, and always had a little bit of that planning element to them. And we're pretty early, into the game of holistically engaging clients, and not to say that things haven't expanded over the years. And when I got here in 2013, one of the things I was specifically charged to help with was working on some of the financial planning offering that we had for clients. And it's been fun to work on that and see it evolve. And, really the firm has worked on this in its entirety. Our firm works very much from a team and committee basis. We have various committees that come together and work on, best practices and policies and procedures. And so it really has been a group and team effort for what we bring to the table today. And you have folks with a lot of different backgrounds, experiences, credentials, and things of that nature that just have allowed us to, expand the capability in these different individual areas. And so when a client comes in to see us today, we sit down and we immediately, want to try and understand from them what's important. What's really driving their finances? What are the big important decisions? And we immediately turn that into the what we heard you say, and repeat that back to them, and make sure we've got a good sense of how we can help. And then just over this 50 or so years, you've just had an accumulation of kind of knowledge and intellectual property that's developed, that you've got a lot of folks in different stages of their career to draw upon to tackle these different situations. You've just seen a lot of different things, and we've worked really hard over the last 10 years to really institutionalize that experience and to capture those years and how we do things, and in our processes and our best practice. And it was about the time I came on that we really tried to move away from kind of the traditional, you put together a big written financial plan, and instead you really broke it down into a digestible process. So as you sat with somebody and they described to you what was important to them, and then you went back and reaffirmed, okay, I've got a good feeling here for what you're trying to achieve. And out of that, I think these are the top 1 to 3 priorities that we really need to tackle first, and then we're going to keep making our way through the different financial planning elements. So I guess just to summarize all that, I would say, it really has been a team effort, and a lot of different folks have contributed to just have added to kind of this vast knowledge base that the firm has. And we really do pride ourselves on being a firm that, yes, we use outside resources and technology and research, but we really try to develop our intellectual property, our best practices, our advice and recommendations, in-house. When a client's sitting down with somebody from Linscomb Wealth, we really want them to feel and to know that they're sitting with the decision makers and those that are weighing in, and that it's not something that we've outsourced to a third party.
Another factor that we see with next generation leaders is the kind of professionalization of the RIA, right? How many employees do you roughly at Linscomb?
Just about 60.
Okay. So we're moving into a professionally managed organization and not just founder-run, founder-led advisors. Do you spend a lot of your time thinking about how to balance that between, a layer of professional management with advisory or client-facing roles underneath? How do you think about the structure of your team overall?
I actually spend a large percentage of my time thinking about the team and the structure of the team. And in recent years, we put a lot of effort and thought into, how do you, the lifestyle practice is the term most commonly used. And, how do you make that transition over time into this true enterprise? And so that is a large percentage of my time. It is, working to make sure we've got the right structure in place, making sure we are recruiting and staffing the structure correctly, making sure we're empowering those folks to, make decisions and run and create that leverage that you want to have. And, of course, with that, you have the typical growing pains. You've got folks that grew up in a lot of different ways, and some that are very comfortable in this, more enterprise version, and some that sort of, look back on the past and, boy, I sure wish we could, have some of those things back. But, it is a big part, because I think for us to set the foundation for the type of growth and success we would like to achieve, it's just so important that we have a strong foundation, that we have a right structure, that we've got good people, and they have clear direction on, how we're going to make decisions and move forward. So that's actually a really big part of that transformational piece for us as we look ahead to the type of growth we want to achieve. So that's a big part.
Yeah. So the professional management roles separate from client-facing advisory. I imagine that there's some, these committees that you talk about. I'm sure that there's some marketing thoughts that go in. You don't double the assets in that amount of time without some kind of marketing. Tell me a little bit about how you market, how you find clients, and what you're putting together for the growth engine.
Yeah. So growth is right there along with structure. Those are two major initiatives that we've been focused on. You can look, as at growth from a few different ways. And we're primarily focused on organic growth. We're not opposed to doing some of the inorganic if we find a firm that's just a great cultural match. But we really want to build that growth engine that pushes growth over time. And fortunately, this is a firm, and this probably goes all the way back to Dan Linscomb. He was a big believer in marketing and a big believer in, no matter the environment, you continue to market. So this is always a firm that's bought into the idea that you need to be, out there, making your services and your team aware. And so I would say maybe the difference, for where we are today is, we're starting to budget and allocate more dollars in marketing direction. We're putting together very specific marketing plans, thinking very strategically about how we approach that. We want to have that playbook that works. We want to have that playbook that works globally for the entire organization and across an entire footprint, but also being able to drill down, in a particular market and be able to look at those nuances and make sure we've got a marketing strategy that tackles that. So most of our marketing is going to be out there networking, but it's also going to be, the digital variety. We might do some print advertising. We tried a few different things over time, but today we're really focused on being strategic. Again, the firm as a whole, how we're branding ourselves and thinking about that across the industry, as well as, out there for clients, and then thinking about, each of the different markets that we're in. So a very strategic effort. And the more success we have with that, the more budgeting dollars we can allocate that to that, which we would love to be able to do.
And do you have internally professionals dedicated to marketing, their full-time role?
We do. We have our marketing team, and she would laugh at it's our marketing team of one, with some additional help that supports that. But we made the decision maybe a little over a year ago to go out and to hire a third-party firm, to help us with the strategic marketing effort that we wanted to pursue, and have been very pleased in that decision so far. It's been a great engagement and very helpful, and really allowed us to leverage those resources and allow us to have budgeting dollars to spend in other ways. So it's been a nice partnership where we have gone out and utilized some third-party resource.
RIA Edge West is designed to provide solutions for those complex pay, personnel, and growth challenges that RIA leaders grapple with every single day. The event will start on October 7th with a new Tech for Growth Summit that will help elite advisors leverage technology to unlock business growth and create scalable, repeatable, yet personalized experiences for your clients. Join us October 7th through 9th in California. For more information or to register, visit informaconnect.com/RIA Edge West.
And that's one of those things that executives need to balance, right? Thinking about at what size do you continue to outsource? At what size do you completely bring in-house? And like you said, there's resource constraints, so you want to be able to spend the money in the most effective way possible. Can you give us any thoughts about some of the metrics that you look at to make those decisions? Is there an AUM number where you say, okay, time to get the second full-time marketing person, or is there thinking that, well, that's not the guideline. It's more these other metrics that we have to look at around growth to decide how to allocate those resources?
Yeah, great question. And in terms of our metrics, I would say that's something that continues to evolve, and we've become more refined with. And as we're able to leverage technology and data, we're able to do more from a metrics and reporting standpoint. But if you really get to kind of where we're going to make a decision from at this stage in the business, it's pretty straightforward and simple. I mean, we want to go out, we want to grow the right way. We want to, we've set a goal, can we double revenue over a 5-year period, and can we do it in the right way? So that's a pretty ambitious goal for us. So, we're looking for, it could be a marketing spend relative to, your new household growth. We keep a pretty close watch on a rolling 12-month average of new business in the door. And then you drill down on that measure, and you look at, okay, how much of that came from existing households in the form of share of wallet? How much of that came from new households in the door? How are we doing and going out there and telling our story and showing value to clients so that they, want to continue sending us business? We also track the source of new business. So where did it come from? How did it get referred in? We still get a large majority of our new clients from client referrals, which, we look at as a gauge of, how are we doing in taking great care of clients. And So those are a few that we pay attention to, from the marketing side, and then starting to pay attention to, metrics. What's the right number of clients for an advisor to work with to have success, to provide a very high level of service. Those are important things that we're starting to keep more and more track of, because you want to fill up the pipeline, but in doing that, you don't want to have it going right back out the other side. And so if you can grow and you can do it in the right way, and you can retain your business because you're doing a good job taking care of those clients, and you can maintain the value proposition where your pricing holds, we feel like our business really is that simple, and it, it's just about executing very well on a daily basis.
You made one acquisition. Other than that, none of this growth has come from M&A. Is that something that may change in the future? Or how do you view the M&A market and where you may play there, or maybe not? Maybe that's not where you see growth.
No, we're definitely interested in looking at M&A. Again, we want to build that organic growth engine. We want that to be the primary driver. And, we feel like as we go along and have some further acquisition opportunities and maybe complete those, that maybe our appetite for increasing the number that we would consider would go up. So right now, I would tell you it's something that we would do and consider, especially across that existing footprint of Texas and the Southeast. And And, if we came across the right firm that was a great cultural match that, aligned from, how we do business, we would be very open to that conversation because, we feel like, if you, just like we did in Atlanta, if you find some good partners and, you enjoy being around them and you see the world pretty much from the same point of view in terms of how you want to work with clients and take care of folks, then it's pretty easy to move forward and make decisions. And what we don't want to do is we don't want to go out there and acquire at all costs. We're not trying to, we don't feel the need to get out there and grow just for growth's sakes to, try and hit some number and try to get anybody and everybody in the door. We feel like that would be, distracting, to what we try to provide for clients and, potentially dilutive to the values we've worked so hard for years to develop as a firm.
Sure, that makes sense. That then leads you to hiring. And I know one of the things we talk to a lot of RIA firms about is the war for talent and the how hard it is to find employees. How are you doing down there in Houston? Are they required to live in Houston, or tell me a little bit about your employment situation and looking for talent and where you find it and how you bring it in?
Sure. So I mean, we would agree there is a war for talent. It is challenging to find. We still feel like this is a little bit of a niche of the financial services business. So you have to find somebody that has the skill set and interest that really wants to do this in the fiduciary capacity. And so it is challenging to go out and find those folks. And of course you want to find, if you're talking about an advisor skill set, you want to find somebody that, is good with people, is a good relationship manager, but also has a strong technical skill set and is also good, with the team internally. And, those candidates it's challenging to find, and everybody's looking for them and everybody's pursuing them and putting more and more on the table in terms of trying to win them over. So, absolutely, we're constantly looking at our programs and how we incentivize folks and the things we can do internally and to engage our team. We recently, a year or so ago, created an engagement committee that, makes sure we've got a good team environment and thinking creatively about how we bring the team together. We do offer remote work and that's sort of a work in progress, I think, for all companies out there in terms of what's the right balance of that. But we're definitely open to it and feel like technology allows that today. And in terms of finding talent, some of it's just our own networks, folks we've come across over the years. But, at times for certain positions, we will use professional recruiters. We will work with universities, particularly those that offer some of the financial planning programs. We will, go out again and look across the network, and hopefully we can find some, good folks that want to come join the business.
Sure. Your firm's unique in that it's largely owned by a bank, Cadence Bank. I know you're still independently operate inside the bank. But can you tell us a little bit about the relationship with the bank and what they bring to you? Maybe what some of the benefits for the clients are. We've seen this with RIAs being owned by banks with various levels of success, right? Sometimes it works out great. Sometimes it hasn't worked out so great. What can you tell us about your relationship with the bank and what they bring to the table?
Sure. The firm has been bank owned almost 20 years now. The original group I sold, I think it was in 2005. And we feel like we have a great relationship with the bank. We enjoy engaging with them. I do get asked that question quite a bit. What's it like living in that type of world? And I think it's there's a lot of different ways, as that firms can be owned or where individuals can work. And as you said, you think about you've got some pros and cons to a private equity structure or roll-up structure if you're independent. And there was I might relate back to there was a McKinsey study, I think it was August of 2021 that came out and talked some about that opportunity between banks and RIAs and the pros and cons. And I think somewhere in that article it referenced the idea of if you can achieve it successfully, you can have this best of both worlds type scenario. And, that's really how we feel about it. And I think that's just part of kind of our team and collegial nature and just always wanting to work closely with individuals. And as we look at the bank, it's, there's we've got a great relationship. You've got it's a pretty good sized bank. I think about 50th largest in the country or something thereabouts. And so you look at an organization of that nature, and they've got a lot of resources, they've got a lot of operating experience, they've got a lot that you can leverage off of. And I think some of the pros might come in some unanticipated places. This is probably not anybody's favorite task to tackle, but if you think about something like vendor risk management, and you've got a good sized bank that has a very robust vendor risk management process that you leverage, and you think about how scary it is out there in the world today in terms of cyber risks and protecting your personal data, to know that you've got some resources like that might be available to you that you can leverage off of, that just kind of brings you from brings you potentially to a different level for clients. I mean, that's a really important piece is, how do I protect that client information? How do I protect that data? And that's probably an area that folks don't maybe think about quite as much, but it's obviously really important. And then you've got a big footprint. You've got a lot of other ways that you can work with that, and it's just something we're very comfortable leaning into. And again, over about 20 years now, just feel like we've had a very good relationship.
Yeah, you don't see a lot of PE firms doing vendor risk management, right?
It's probably not the first thing they're leading with in a potential conversation, no.
Is it also a benefit for clients? I'm sure they're not, in any way required to do banking at Cadence, but is there the notion, we hear a lot about the notion that clients really are looking for sort of the one-stop shop, right? It's maybe a little bit what got lost in the move to the RIA space, and that their services are being chopped up into several different entities, a lot of different apps on the phone, right? Is there a benefit to clients for having kind of one place to go for both wealth management and banking? Do you find clients looking for that, or is that not part of the value prop?
Yeah, I mean, I think every client that comes to you has a little bit of a different specific thing that they're looking for. And the number one reason we continue to hear that clients hire Linscomb Wealth is, they want to work with a fiduciary and somebody they feel like they can trust and is going to address things holistically. But absolutely, you will come across those clients that have broader needs, and sometimes those needs might be banking related. And in that regard, they might ask us for an introduction if they're aware of that relationship, or they may ask us do we know anybody that provides these services? And if they're interested and we feel like we feel like that fits within their overall plan, then we're happy to make that introduction, if again that's something that they ask for there. But again, some clients they want the fiduciary, they like that aspect of it, but some, again, as you described, they want they want a little bit more of that one-stop shop. And again, where it makes sense, we're glad to make an introduction, and the client can see where it goes from there.
Mm-hmm. And I have to ask too, I know as we're kind of coming up at the end of our time, there was a time when the RIA industry was seen as a fairly collegial place to work, and I think it still largely is. But we've seen the news stories about the legal actions taken against some of the early folks there at your firm over some non-solicitation and provisions, breaking some non-solicitation provisions. I know you can't speak to specifics about this case, but could you reflect a little bit on maybe what it says to you about the maturation of the RIA industry? I mean, we see this stuff all the time with the wirehouses and the broker-dealers. Are we starting to see this a little bit more often in the RIA space? I think so. And certainly everyone's has a right to protect their trade secrets and their contracts. But how would you reflect on what these kinds of legal actions, again, not just at your firm, many firms, RIAs are doing similar things. We see the headlines. Does this mean that the RIA industry is getting to a point where it's becoming like almost starting to mimic the old Wall Street firms? That's a broad question. Sorry.
It is a broad question, and one maybe I would have to think on a little bit more. I mean, I definitely think we could reflect and say, the RIA industry is definitely getting bigger and more complex, and you have more things going on, and you have more people in the space, and as you bring more people together and and new and different ways. I think, you can have a lot of different things that take place, but for us, we really always try to bring it back, to our firm, to our values, to what we've committed ourselves to. And, there's always going to be, and try not, again, try not to think about, you've got to pay attention to what your competition is doing and what's happening in your industry and space. But I think for us, most importantly, we want to focus really hard on our clients and what we're doing for our clients and the values that we bring to the table. And we just feel like if we keep showing up on a day-to-day basis, and again, we focus on that character and we focus on that process, that, we're going to have good results out of that, regardless of what's going on around us. And, of course, again, as things get bigger, they get more complex, and, you get more in different situations.
Sure. One last question before we part ways here. Anything that you see on the horizon that Linscomb maybe doesn't offer clients that you'd like to, or where you see a demand from your current clients or potential clients, areas that you might think about moving into that maybe you don't have as robustly now as you might want? And I don't know what that might be. If maybe there's something energy related or family office related, I don't know. But where do you think you'll move next in terms of service offerings?
Yeah, this is something we obviously talk about a good bit. And, there's the core of our business that remains very strong, very planning centric. And, what could we add to that brings value to clients? And not getting in too much into the specifics, but we're always looking at things, from the investment portfolio side, interpret it. Would that be a good solution for our clients? Would that help solve a niche for them or a particular situation? So, on the investment side, there's a lot of innovation. There always has been. And so, you're always evaluating, what comes down that path. And so that's an area, is there something we can do to broaden our investment solution, where we've been a pretty traditional shop? So that's something we always kick around. We have a pretty robust set of financial planning services. Are there specific things that we could come across that would expand that? A lot of times those conversations today are more around some of the tools and technology they're coming to market that maybe we can leverage to do a better job of enhancing what we provide to clients, or things of that nature. I'm thinking of some estate planning softwares that are out there that, our team is looking at right now that might help you better visually describe for clients how those sorts of things work. So that would be an example. From time to time, the ideas of, that I know there are firms that have been born out of CPA firms, or should you add some of that tax compliance? We kick that around, from time to time, but it's never really materialized. Nothing's really materialized beyond just a general conversation in that regard. So, we pay a lot of attention to different things that are out there and things we might want to incorporate at some point. But I would say for the most part, we feel like we continue to do a good job for clients and have a good amount of success. And, so I think where we're going to focus is, more on, how we can deliver that more efficiently and consistently across the board. But so at the moment, nothing big and exciting. I wish I had something big to unveil here, towards the end of a conversation, to say here it is. But right now, not really, but a lot of things that we'll kick around and give some thought to, but at the moment, no.
Okay, well, that's great. That's fantastic. This has been great. I think the RIAs listening to this have learned a lot. I've learned a lot. Phil, CEO of Linscomb Wealth Management, thanks very much for joining us on the RIA Edge podcast.
David, thank you for having me.
And thank you for listening. Schwab Advisor Services is a proud supporter of the RIA Edge podcast and independent financial advisors like you. When it comes to your independence, Schwab Advisor Services is all in. They provide industry-leading custody services with no AUM minimums, no custody fees, and digital onboarding for starters. With Schwab, you'll be backed by some of the most passionate folks in the industry with over 35 years of experience helping firms of all sizes. To learn more about everything Schwab can do for you, visit advisorservices.schwab.com.